It's Mr. Connector. Let's get your week started off right with the daily market intel report for August the 3rd, 2026. Will this be the week, guys? You know how Capitol Hill works, so we shall see. Keep that in mind. I'll let you know what I hear. Geopolitical macroeconomics. Trump called off a planned strike on Iran after being asked to hold the fire. He's framing the deal perimeters around a full Hormuz reopening and nuclear constraints on Iran. Iran's foreign ministry denied talks with the U.S. are underway and pointed to the Oman Channel Hormuz management instead. Pause is real, settlement is not. So they're still working all this out. Brent oil printed around $82 to $83 a barrel. West Texas Intermediate had about $79 a barrel, about 6% lower. The 10-year U.S. yields eased towards about 4.69% as the energy premium cracked. Risk assets outside crypto caught a bid, though. Japan and the U.S. confirmed they are in a rare joint yen buying intervention and signaled readiness for more. I think that U.S. sold euros to buy yen to help balance out the carry trade. So once again, you know, they pull their shenanigans to prop up the system. That's all that's being going on. It's all big propping it up, keeping it going, keeping the old system going when we're ready for the brand new digital currency system. Key takeaway: diplomacy bought an oil relief window. Ink and tanker routing still decide whether it sticks. So we should monitor the Hormuz actual transit versus the rhetoric. U.S. jobs print this week. Yen defense follow through. Watch all that. Okay, we've got the general crypto market. We've got the price here. You guys know the prices. And then it says that the last completed U.S. spot Bitcoin ETF season remains Friday through the 1st of July. So they're just still looking at last week's. Let's actually take a look at, I think I've got XRP's ETF pulled up here. And this dates back to November 2025. Of course, a lot of green starting off there. But look, mostly overall green. We've got a few down days. Of course, the price is in the yellow line here. That does not reflect the inflows. Of course, this market is being manipulated. We've yet to see it in action for what it actually was built to do. Let's look at Bitcoin. Actually, let's just look at all crypto ETFs and look at the line on that. Net flows. You'll see all that. So that's more balanced out, more selling on the Bitcoin side than the XRP side. So you've got a lot more outflows, it looks like, on Bitcoin comparatively, not by the actual numbers, but for each asset. So there's Bitcoins. You see all the red out and the green inflows. So there's a lot of red out there. And back to XRP again. A completely different looking chart there. Just wanted to show you guys that. And let's look at the heat map. Bitcoin up 1.6% today. Let's look at the Conectr coins. Past 24 hours. Sentinel, peer-to-peer. That's a privacy play that I'm involved in. And Veritasium still hold a few of those from back in the day. 4.4% on Algorand, 3% on, actually 4% on Cosmos. So some of these coins are getting a little bit of movement. Let's look at the 7-day on the Conectr coins. Electroneum up the most, Algorand, and Metallicus's Alone Protocol in the midst. All right. What else do we have? Total crypto market cap, $2.16 trillion. Let's get back to the market intel report. We've got the cold card. Oh yeah. So there was a big hack Cold card hardware wallet, entropy flaw remains the lead crypto story and is still active. 3 mapped waves tallied about 1,367 Bitcoin, near $89 million, roughly across 4,585 addresses. My God. A possible fourth wave today, Monday. It's still going on, guys. Pushed observed totals toward about 1,816 Bitcoin, near about $114 million now, across more than 5,200 addresses. Latest pending sweeps used to replace a fee. Latest pending sweeps used replaced by fee. Victims who catch their coins in the meme pool can still outbid. Flaw traces to March 2021 firmware seed path. So they've been producing, this hardware company, Cold Card, has been producing weak seed phrases since 2021. Multi-sig setups have not been the target pattern. This is a vendor entropy failure, not a base layer break. Holders that still rotated coins and sentiment stayed soft. So it looks like the multi-sig setups were good to go. Multi-sig is interesting, guys. Only time I've really played with that is on the WebAuth wallet. I did a video a couple days ago on that. And I turned it into like a hybrid signing system where I still have my master control, my master signing, where I can do anything. But you can restrict it to where you need 2 signatures. And that would really help out in situations like this, I assume. Unless they were able to somehow hack both signatures. It's like 2 wallets signing for 1 wallet is how that works. So multi-sig is definitely a way to protect. But you know, a lot of us, it took me years to get into it and trust it enough to go in and change the settings on a wallet. You know, that's a pretty big deal. Let's get to MicroStrategy. Sold 1,638 Bitcoin last week. 1,638 Bitcoin, which was about $105 million. Cutting the holdings to 842,138 Bitcoin, while raising about $290.6 million via common equity, adding $250 million to a $4 billion US dollar reserve, and repurchasing about $81.2 million of STRC preferred. Is that the strategy? STRC? I thought it had a G in it. I don't know. Corporate Bitcoin Treasury is managing capital structure, not only sticking. XRPL and Stellar ledgers looked operationally normal. XRP load factor 1, Stellar protocol 27. Ripple said it's investing in Xylo and Lucido to add regulated transfer agency issuance and collateral mobility on the XRP ledger. Rails news on security heavy tape. Let's see if we can find an article on that. Oh yeah, I'm still on this screen. I got to get used to switching screens. These are 2 UK-based companies, Xylo and Lucido. Expand into regulated capital markets infrastructure. 14 hours ago from Ripple. Ripple strengthens digital capital markets infrastructure with investors from Xylo and Lucido. Global capital markets are built on infrastructure that predates the rise of institutional-grade digital assets. And there's no easy way to unlock liquidity and mobilize collateral securely, confidentially, and compliantly. Ripple's infrastructure. Of course, they want to go compliant. They want to do it fast, efficient, and compliant. All right, back to the market intel report. Traditional finance and crypto convergence. Bitmine immersion added about 10,399 Ethereum last week. Roughly $19.1 million, lifting holdings to about 5.8 million Ethereum and 4.8% of the circulating supply. So Bitmine owns 4%, almost 5% of the circulating Ethereum, with the total crypto and cash holdings framed near $11.3 billion and large staking share. Corporate Ether accumulation remains the cleaner TradFi crypto bid this cut. Strategy Bitcoin sale plus STRC repurchase. And equity raise shows the largest public Bitcoin treasury prioritizing preferred structure, support, and cash reserve over pure accumulation this week. Okay, we've got Robinhood's United Kingdom arm landed on the Financial Conduct Authority crypto asset regulation list as of the 31st of July. AML regime access ahead of a fuller UK crypto framework window later. Venue passporting beats slogan compliance. The EU's figuring it out. Bitcoin futures carry that once printed rich double-digit yields is now trailing 2-year U.S. Treasuries on several measures. Basis trade no longer pays like 2024. Market structure matured into tighter arbitrage. Regulatory developments. Market structure clarity path still jammed into the final pre-recess window. Roughly 5 scheduled Senate session days before the August break. Reporting indicates the bill was not on Monday's floor agenda. Crowd odds that the Clarity Act signed into law in 2026 is now near 28%. It missed the recess, and the next clean window slips towards mid-September or later if they miss it this week. U.S. SEC continues to hold NASDAQ cash-settled Bitcoin index options after the CME turf challenge, arguing commodity options belong to the CFTC comment window, still open until late August. Robinhood UK, we talked about this just a second ago, is the constructive local compliance counterpoint while the U.S. statute stalls. BitGet flagged the Japan exit path by year end. Venue geography keeps shifting under local rules. DeFi and RWA tokenization. Ripple, Xylo, and Lucido Investments target transfer agency issuance and collateral mobility so tokenized funds can work as collateral from issuance. They're going to get all these tokenized assets in DeFi, guys. And what did they need in all these DeFi markets? They need stablecoins to peg them to. And how do they move stablecoins? They need layer 1 rails, non-counterparty assets to peg the to pair the markets, the stablecoin markets to. It's going to be beautiful the way it all works out, guys. I know you guys see it coming too. Hang in there. XRP still a smaller RWA venue versus Ethereum totals, but the institutional packaging stack, which is the mint, redeem, transfer agency collateral, is what really moves the capital, not the headline. AI and blockchain. Alibaba unveiled its latest flagship Quinn model as the US-China AI competition stayed front page. Equity and infrastructure narratives still dominate pure on-chain AI agent noise this window. And that's an open model, guys. A lot of people don't know about, frontier models like Anthropic that you pay for every month or for the tokens, Once you start getting into tool calling, you're gonna you call on a lot more tokens than just chatting with an AI. And this is a Quinn model out of China. There's several out of China. Kimi, Quinn, DeepSeek, a couple more probably. But they are interesting though that they're open source, free. You know, you can download your own models. You got to have the expensive hardware though. European Commission enforced powers under the AI Act, which includes inspections, market restrictions, and large fines. They raise compliance costs for frontier labs shipping into Europe. Policy is becoming a product constraint, not by a press release. So the AI compliance costs is an issue in the EU. Visible AI tool spend inside the U.S. House offices. Shows government adoption running in parallel with still thin federal AI statute. Demand ahead of final rulebook. Prediction markets. Kalshi, Polymarket, and Polymarket US. Okay, so that's two different companies, Polymarket and Polymarket US. Just like Binance and Binance US. That always means though that the other one, the Polymarket US, is probably just like Binance US, and there's not enough liquidity in it yet. So we'll see how that shapes up. I haven't dealt with Polymarket as a US citizen. I did sign up 6 months ago probably, because it is now legal, of course, in the States. But they are, I guess they're rolling it out slowly for certain citizens, I guess. I don't know. I've been waiting for a while to hear back on Polymarket. But Polymarket and Kalshi and Polymarket US combined July volume hit about $50.6 billion. $50 billion, guys, for prediction markets. This is taking over a lot of crypto volume, prediction markets. You know, they see it as a easy in and out gambling, you know. I'd rather hold an asset. I know crypto's kind of like gambling to a lot of you guys, but you still hold something. You still hold technology in your wallet. You know, if you make a bet and you lose the prediction bet, you don't hold anything. You don't have any kind of investment. So to each his own though. I've yet to get into that, but I did try out the, was it Axiom, which was the XRP Ledger version of prediction markets, where you have to swap your XRP into the ERC20 sidechain ledger XRP. So you use a squid router from Axelar to convert your XRP and send it into the EVM wallet, and then you can join the smart contracts on Axiom. But Axiom was nice, but there was no liquidity there. So it was kind of new, and I guess it's only XRP holders. So how many percentage of them were going to get into that? That SEC lawsuit really set us back, guys. Imagine all of the developers and all the people that would have stayed in the XRP if not attacked by the government, and people felt safer spending their time working on Ethereum and things like that. So that was a really big, kind of like a step back in the space, but we are getting closer every day. Clarity Act signed into 2026 crowd. Yes, near 28% on the prediction markets. The volume on that it just says multi-million-dollar volume on the contract. Out of 30 billion over all the markets. That's a pretty big market. Market prices process failure risk higher than bullish lobbying headlines. We've got state-level sports contract fights against the prediction venues continue as the federal CFTC framed it contested. Legal overhang still sits under the volume party. We got the New York Letitia James going after Cauchy, I think it was. They want that money. Risk opportunity analysis. Overall risk score 7 out of 10. Overall opportunity score only 5.5 out of 10. Very selective. Recommendations. Short term, 1 to 4 weeks. Treat cold card as an operational incident. Inventory device firmware lineage. Moves funds off weak seed paths. Move your funds off weak seed paths. Prefer multi-sig, fresh entropy. Do not confuse this with Bitcoin protocol failure. Yep. It's a third-party wallet provider, or it's a card where the seeds on each card, I think. It's only produced for the one, like a credit card, maybe. I'm not very familiar with cold card. Watch Monday through Tuesday spot Bitcoin and Ether ETF finals once printed. We'll see that tomorrow, what it does today. Pair with the U.S. jobs and oil settle for the real risk on test. Track the Senate calendar. Language on the market structure daily through the recess cliff process pundit. 1 to 3 months midterm. Favor regulated packaging and collateral mobility stories like tokenized funds, transfer agency, and mint redeem over pure price theater while the ETF flows chop. Map corporate treasury behavior split. Ether accumulation vehicles versus Bitcoin treasuries managing preferred and cash. Differential capital structure games. Follow the UK and other local registration regimes as venue prepositioned before fuller rulebooks. And long-term Rails and Sovereignty Stack, which is settlement identity adjacent controls and local open agents. Still compound if 2026 statute slips. Also, hardware and seed supply chain assurance becomes first-class product category after this class incident. Very important. Funny timing, too. This stuff's been around since 2021. I had mentioned before on the live streams that, some of these hacks will take years to happen. They will collect seed phrases the best they can through whatever means, and they'll sit on them. A lot of times they won't even hack them until they're ready, until they have enough attack vectors, enough attack wallets lined up. And then they'll program it all to attack all at one time so you can't rush and cut a wallet off of an exchange or whatever, wall it off. Key metrics to watch. Bitcoin holds or breaks the $62,000 zone into Iranian talk headlines. Ether around $1,840. XRP around 1.06 sorry. US spot Bitcoin ETF season total for Monday 3 August once Farside completes, so we're still waiting on that today. Cold card cumulative observed Bitcoin drained, and whether fourth wave RBF victims successfully reclaim. So they're in some kind of a meme pool where they can still withdraw, I guess. Some of them. But that hack is still happening, guys. Still happening today. Brent and WTI settle versus Hormuz transit counts. 10-year U.S. yield pass after oil dump. Clarity Act, market structure, Senate calendar items before recess. Poly market signed in 2026. Yes. 28% for this year. It happening. Strategy holds a path versus Vitmine ETH accumulation. XRPL institutional packaging follow owns at their Xylo and Lucido partnership or purchase. U.S. jobs print any Fed path language this week. This has not been financial advice. This has been your daily market intel report for August the 3rd, 2026. Thank you guys so much. I hope you have a great Monday and a great week. Mr. Connector out. Peace.